Hello, everybody, and welcome to exercise 8-5. Craig Company asks you to review its December 31st, 2020 inventory values and prepare the necessary adjustments to the books. The following information is given to you. Craig uses the periodic method of recording inventory. A physical count of the inventory reveals 234,890 of inventory is on hand. Okay, so we're going to have our little inventory account here. So our physical count is 234,890. Okay. All right. So not included in the physical count of inventory is 13,420 of merchandise purchased on December 15th from Browser. This merchandise was shipped FOB shipping point and on December 29th and arrived in January. The invoice arrived and was recorded on December 31st. So when did I take title? So FOB refers to free on board. I will never ask a student again what FOB means, because guess what they'll say? It means free on board. It refers to when we take title to the inventory. If it's FOB shipping point, title passes at the sellers as soon as the seller ships it. If it's FOB destination, we do not record the inventory until we receive it. So here, I'm going to include this in my inventory, even though I didn't receive it, because I took title to that inventory on December 29th when the goods were shipped. Okay. Included in the inventory is merchandise sold to Champy on December 30th FOB destination. This merchandise was shipped after it was counted. The invoice was prepared and recorded as a sale on account for $12,800 on December 31st. The merchandise cost $73.50 and Champy received it on January 3rd. Guess what? We don't do anything. It's included in there already. So it's properly included. So for 3, no adjustment. And the reason why is because if it's FOB destination, Champy doesn't take title until receipt of it. So I don't have to take that off of my books. So it is properly included in my books. If it was FOB shipping, I'd have to take it out, but this is FOB destination. Okay. Included in inventory was merchandise received from Dudley, and on December 31st with an invoice price of $15,630. The merchandise was shipped FOB destination. Okay, it was shipped, so it was merchandise received from Dudley. Okay, and so the merchandise was shipped FOB destination. That's fine. It doesn't matter whether or not the invoice is there. The invoice, what I more care about is what's included in my physical inventory. So here, this is going to be no adjust. It's properly in there because it was FOB destination and I received the amount. Okay, so not included in inventory is $8,540 of merchandise purchased from Glauser Industries. The merchandise was received on December 31st. After we had been counted, the invoice was received. So this should be in inventory. So I'm going to go ahead and adjust this here for $8,540. Okay. Included in inventory was $10,438 of inventory held by Craig on consignment from Jackal Industries. Okay, so if it's on consignment, it means that I do not own it. So what I'm going to need to do here is I'm going to need to reduce my inventory for this $10,438. Okay, so I'm going to reduce that. Okay. Consignment means that somebody is giving it to me to sell. Generally, I do not own it. I'm just holding it for them until I sell it, and then I'm going to take a cut of it. Okay, so that's number 6. Number 7, included in inventory is merchandise sold to Kemp FOB shipping point. The merchandise was shipped on December 31st after it was counted. The invoice was prepared and recorded as a sale. The cost of the merchandise was $10,520, and Kemp received it on January 5th. So this is included. Doesn't matter when they received it, it was shipped FOB shipping. So I no longer owned it on December 31st. So I need to reduce my inventory of 10,520 right over here. Okay. So number 8, excluded from inventory was a carton labeled "Please accept for credit." This carton contains merchandise costing $1,500 that had been sold to a customer for $2,600. No entry had been made on the books to reflect the return, but none of the return merchandising was damaged. Craig will honor the return. So I've received inventory back from a customer. So what I would need to do, because this is excluded, right? This is going to basically be over here for 1,500. And this here is going to be number 8. So it cost me 1,500. I'm accepting it back. So that's what I have to go through and do. Okay. So as I look at this over here, right, what is my new ending balance in my inventory account? So when I subtract these through, my new proper balance is going to be 237,662. Okay, so what do I need to go through and make adjustments for? So let's go through and do these. I'm not going to do these completely in proper form, but let's go ahead and do number 2. So I purchased this on account. So I'm basically going to do here inventory. I'm going to credit accounts payable. And this here is going to be a debit for 13,420 and a credit for 13,420. So I got inventory, it was on account. Number 5. So over here on number 5, the invoice is received and recorded, so I don't need to do anything there. And actually, I don't even need to do anything here. For number 2, this is already recorded properly. So here, this was already done. I don't need to do anything here. So I didn't even look at this carefully enough. The invoice arrived and was recorded, so this is already on, it's now on the books. It just wasn't in my physical count. Over here, the invoice was received and recorded, so this is also done as 2. Okay, so included in inventory was 10,430 of inventory held by Craig on consignment from Jackal. So I think what I would do here for number 6 is I would be crediting inventory 6, and then I would call this consignment. Over here for 6. I'm just going to pause and just check this real quick. Hey, everybody. Just one error that I made right over here. This is going to be, this is 10,520. My numeric dyslexia is at it again. So, but I've at least, this is the correct amount. Okay. So, so let's take a look at this here. Yeah, so okay, so this is the correct amount in terms of the inventory. As far as, let's take a look at number 3. So 1 and 2, we don't need to do any adjusting entries. It says included in the inventory is merchandise sold to Champy FOB destination. This merchandise was shipped after it was counted. The invoice was prepared and recorded as a sale on account for $12,800 on December 31st. So what I'll need to do here is I'll need to reverse this journal entry, which is basically going to be sales revenue and then accounts receivable. And this is going to be 12,000 or 13 for 12,800 and 12,800. So this should not have been recorded as a sale. It's still in my inventory, right? So included in inventory was fine. So I didn't book it yet to cost of goods sold, but I need to reverse this sale part here. Okay. So included in inventory was merchandise received from Dudley on December 31st with an invoice price of $15,360. We said that that was good. The merchandise, okay, so the invoice of which has not arrived has not been recorded. Okay, so this is going to be for number 3. And even though it says no adjust, I'm not adjusting the inventory. I need to reverse the sale because that sale was in fact recorded. So here for number 4, I'm debiting, I need to debit inventory. And I'm going to be debiting inventory here for 15,630. And over here, I'm going to be crediting accounts payable. Now, if you notice here, this is a physical count. So this is already in the physical count. This is just getting my books caught up to the physical count. Okay. So let's take a look at number 5. Included in inventory was merchandise received. Okay, so we've done number 4. Not included was 8,540. The merchandise was received on December 31st. This was recorded on December 30th, so we're good there. Transaction 6 on consignment from Jackal Industries. So I'm just removing this. I don't know why it's not having me in the solutions record this as some sort of consignment inventory. But I think I would still want to go through and remove this because it shouldn't be included on this amount here. I don't know how it was originally recorded. I probably would call consigned. It's almost like a custodial type account. I'll have to look that up though. Number 7, included in inventory is merchandise sold to Kemp, FOB shipping. And I basically recorded it as a sale, this was proper because I've already recorded it. Okay, so over here, if I'm going through and accepting back merchandise, so what I need to do for this one here, is I need to debit sales returns. Okay, I'm going to credit accounts receivable for 2,600. And then at the same time, I would need to show the inventory coming back, which would be a debit to my inventory for 1,500, and a credit to cost of goods sold for 1,500. Okay, so that is exercise 8-5. I'm more interested though in this part here. If I were to ask something like this on a test, the journal entries here and the way this is being described, I don't necessarily like the way that that's being handled. So anyways, I will see you on the next video and have a great one. See you soon.